Joining us now with her insights is Michelle Schneider, marketgauge.com chief strategist. Michelle, good to talk to you today. So, it's sort of kind of moving in the direction of good news is not necessarily good news for the market. If that jobs number comes in stronger than expected tomorrow, how high do yields move?
Well, it's so interesting because if you want to get some clues, so far, right, ADP payroll was weaker, but it still was jobs added. And of course, what we saw today was basically in the range that we've been seeing between 200 and 250. So it tells me that most likely, if we see any tick up in unemployment, it may not be enough to really give the Fed reasons to change the course that they've been so clear that they're doing right now, which of course is keeping rates higher for longer. So there could be a surprise, absolutely. What's so interesting about the market right now, Kiko, is that we have our risk gauges, which measure ratios between things like junk bonds and long bonds and the SPY and the long bonds, still saying risk on even with this sell-off. So maybe they're suggesting the surprise here. Maybe it's because utilities are so interest rate sensitive. But overall, I think we have to be extremely cautious considering the inside sectors that we like to watch, which would be transportation, small caps, and retail, are sitting on a very critical line in the sand that if they break further from here suggests recession, which of course then at some point would probably be reflected in jobs.
So then, Michelle, is a stock sell-off basically the only way to tame this bond rout that we're seeing?
Well, possibly. I started thinking this morning, Rochelle, about how do you find a needle in a haystack? And what you have to do is you have to burn all the hay. And so maybe that is exactly what has to happen. We hope not, of course, because it's very damaging. But this is the reason why you have so many different calls, from a seasonality call of pre-election year, market's going to make new highs, because anticipation is the Fed will have to relax at some point and not be so afraid of the goose of inflation. And then, of course, you have the camp that thinks, yeah, we've got to burn the house down and then see what needles are left. It's really hard to know right here. So I think we have to be a bit more patient.
Which camp are you in, Michelle?
Right now, a gun to head, I would say that unless there's some kind of real capitulation in the bond market, and the best I can say is if we look at the long bonds, the range of the last 2 days are within the range of when it made that big dump on Tuesday. So we're still holding there, which means maybe it could reverse. The dollar certainly has softened. Other than that, I would have to say, looking at the small caps, they look like they are burning right now. So I would be more on the downside than the upside this moment in time.
So then, Michelle, obviously we're in a higher for longer interest rate environment, still seeing bonds thriving at the moment. I mean, having that bond rout. Who gets stung the most? What kinds of investors, based on the inflows that you're seeing, are going to get stung the most here?
Well, people who don't know anything about trading commodities, which I'd love to talk about for a moment. But to answer your question, I think those that have really been sold two things. Number one is growth stocks will always do well no matter what. Relatively, yes, but we know that they can fall under the pressure in terms of that big crocodile chart that you're seeing, the spread between growth and small caps with the jaws so wide. If small caps fall, we know the top jaw is going to have to fall as well. And the others who feel like we can do, a dollar down averaging, just keep buying dips. Because if we go into not recession, but stagflation, the market may not necessarily crash so much, but it may take years, possibly 2, 3 or more years, for those numbers to come back in terms of those growth stocks and even the dividend-bearing stocks. You have to realize at what point are your dividends taking control of your life as opposed to watching the stock go down. So the people who are passive investors always have the most to lose. And that's why we always try to educate people on having some kind of a risk parameter in their portfolio.
So, Michelle, let's talk strategy, where you're putting your risk on there. Transportation, one sector you're looking at right now. I'm curious what part you find opportunities in, because that's one, especially among car makers, we've been talking a lot about with the UAW strike, with the transition we're seeing to EVs. Is that the area where you're increasing exposure?
Well, again, everything, if we have some kind of a liquidity crisis, is going to fall, including EVs, especially if it's more recessionary than stagflationary, because people will not necessarily go out and buy EVs and production can get halted. And right now, it's interesting that you mentioned the strike, because in terms of investing, we're very, very light. I look at the transportation IYT because it actually has been outperforming versus, let's say, the retail or the small caps. But that doesn't mean that outperforming is great performance. And the rally we've seen recently in Rivian and Tesla, again, has gone up, but into resistance, not really wowing us yet. So I'm looking at, in terms of investments right now, I have waited for this correction in a lot of the commodities, the soft commodities, natural gas being really big on my list, things that have to do with supply disruption. This strike to me is a potential indication that unrest could increase here with so many issues that we have in this country besides higher prices and higher interest rates and strikes and theft and government that seemingly is not necessarily engendering confidence. This tells me more of the stagflation is really what we prepare for. And if that's the case, you want to look at some of those commodities as investments, possibly looking into the ags or DBA or natural gas or or some of the companies that deal with delivery, like TK would be one, or Scorpio Tankers. They're holding up in this environment so far.
Certainly a confluence of issues the American economy facing here. Appreciate you taking the time to join us this morning. Michelle Schneider, marketgauge.com, Chief Strategist. Thank you as always.
Thank you.